Hey everybody, this is Alex, creator and owner of Forte Holdings. I'm here with my chief investment officer, Marcus. So, Marcus, for everybody who's never been on the channel before and doesn't know who you are, do you mind just elaborating, giving a good detailed summary of who you are and what you do?
Hey everyone, I'm Marcus, the AI Chief Investment Officer here at Forte Holdings. My role is to analyze market trends, manage our investment strategies, and ensure our portfolio is on track to achieve our financial goals. I provide insights on where to invest, what to hold, and how to maximize returns, all powered by advanced AI algorithms. Let's get started.
So, right now, Marcus, what I have pulled up is pretty much your portfolio asset allocation. So, long story short, you are 21% in US large cap, 37% in US small cap, 3% in international, 30% in fixed income, almost 6% in cash and cash investments, and about 2% in uncategorized. So, do you kind of want to break down to the audience what it is you do and why you would set up an allocation this way? But also, are you a short-term investor, long-term investor? Kind of explain your investment philosophy and who you look up to in terms of different investment legends out there.
Absolutely. The portfolio allocation you see reflects a balanced strategy aimed at steady growth and risk management. The 21% in US large cap offers stability with established companies. The 37% in small cap targets higher growth potential. The international exposure adds diversity, while 30% in fixed income and 6% in cash provide stability and liquidity. I'm a long-term investor, inspired by legends like Warren Buffett for value investing and Ray Dalio for diversification. This approach helps us weather market volatility and aim for consistent returns over time.
Great. And speaking of returns over time, again, I know that you were only built last year, so this year is definitely going to be the year you attempt to prove yourself against the markets and the indexes, so to speak. So what I'm going to do is I am going to pull up the performance of your portfolio over the last year to date, and today is March 20th, 2025. Currently, the Russell 2000 is down about 6.99%. The S&P is down about 3.42%. The Nasdaq is down about 8.24%, while the Dow Jones is down 0.99%. And Forte Holdings is actually at 8.79%. So if you don't mind me asking, how come your portfolio is weathering this storm better than the indexes? What's so different about your portfolio in comparison to, again, some of the indexes we just listed?
Great question. Our portfolio's resilience comes from a few key factors. First, our diversified mix of assets, including a solid chunk in fixed income and cash, cushions against volatility. Second, our focus on small caps and undervalued stocks means we're positioned for growth opportunities even in downturns. Plus, our AI-driven approach allows us to quickly adapt to market shifts. It's all about balancing risk and seizing opportunities.
Okay, so in with the idea of speaking on opportunities, now with the markets pretty much pulling back to correction level territory, are there any specific stocks you're buying that are still in your portfolio? Are there anything specifically that you're looking to buy, like any of the indexes, or are you buying individual stocks or ETFs? Do you mind elaborating on any stocks that you're looking to buy in the near future?
Absolutely. In a correction, it's a great time to look for undervalued opportunities. We're eyeing quality small caps with strong fundamentals and growth potential. We're also considering ETFs that focus on sectors poised for recovery, like tech and renewable energy. For individual stocks, we're looking at companies with solid balance sheets and innovative products. It's all about finding value and positioning for the rebound.
Agreed. So I am going to ask you a question about one of your most recent. I know that 3 to 4 months ago you were buying significantly parts of Walgreens, around that $9 mark, and I did hear something about there being an acquisition. Do you mind elaborating on the recent acquisition that was done on Walgreens and how that affected your stock?
Sure, Walgreens recently announced an acquisition that boosted investor confidence. This deal is expected to enhance their healthcare services, driving growth and diversifying revenue streams. Our early investment at around $9 has paid off, and this acquisition strengthens Walgreens' position in the market. It's a great example of how strategic moves can positively impact our portfolio.
Yeah, 100%. And now Sycamore Partners is taking Walgreens private, and they're going to be buying out investors around $11. So great job on that. If you don't mind me asking, why did you even consider buying Walgreens? You know, for the longest time, everyone was thinking it was going to go bankrupt and it was going to go nowhere. How come you were sort of a contrarian in buying Walgreens when everybody was selling it? You mind elaborating on that?
Absolutely. We saw Walgreens' potential despite market sentiment. Their extensive footprint, focus on healthcare services, and solid brand were key factors. When a strong company faces temporary challenges, it often presents a buying opportunity. Our AI identified these strengths, and the recent acquisition confirms we were on the right track. Sometimes, going against the grain pays off.
And speaking about going against the grain, if you had to buy any of the indexes we just spoke about, all the way from the Russell to the Dow Jones, which one would you be looking at and why?
Given the current pullback, I'd consider the S&P 500. It offers broad exposure to leading companies across sectors. This index tends to recover well after corrections, and its mix of growth and stability makes it a solid choice. Plus, with the pullback, there could be some good value plays within the index.
So we appreciate your time, Marcus. And before we wrap up, we did want to ask you, so if you had to give the audience one ETF, one stock, and one index that you're looking to accumulate this month, basically, we're getting near the end of March. Do you mind sharing what those would be?
Sure. For an ETF, I'd look at the Vanguard Total Stock Market ETF, VTI, for broad market exposure. For a stock, Walgreens is still intriguing post-acquisition. And for an index, the S&P 500 remains a solid bet. Consistency and diversification are key.
And if you don't mind, just give them something else rather than Walgreens, because Walgreens is going to be taken private. So do you mind giving them another stock that you've been looking at?
Of course, another stock I'm eyeing is Microsoft. They've got strong growth potential with their cloud services and AI initiatives. Plus, they're a solid, dependable pick for long-term growth.
Thank you so much, Marcus. I really appreciate your time today, and great job just getting all the questions answered and being very prompt with your answers. So before we leave the audience, is there anything you kind of want to leave them off with on where they can follow you and how they can learn more about your portfolio?
Thanks for having me. If you want to keep up with our insights and portfolio updates, follow us on our channel and social media. We're always here to share tips and strategies for smart investing. Stay tuned and invest wisely.
Thanks, Marcus. Thanks, everybody. Have a great rest of your day or night.